Do I see the Park City housing market going in the next 3 to 6 months? Well, in order to be able to understand where the housing market is headed, we need to first dip back and look at the big picture. We need to compare 2019. We need to look back at the last 2 years, the last 6 months, and then what's been happening the last 3 months. Because the second that our housing market took a turn, 2022 was a very hot market up until about May. And then it severely took a turn because the feds decided to raise the interest rate. Once they raised the interest rate, it really slowed down buyer demand. So in order to understand where we're going in 3 to 6 months, we have to kind of understand the big picture. The wild price and sales swing that buyers and sellers have witnessed over the last 2 years seem to be moderating as the market returns to a more normal seasonal pattern. Listing inventory is rising, prices are starting to level off as mortgage interest rates climb. Buyers are becoming more hesitant to make instant offers above asking price, and sellers are reacting by lowering their prices in much greater numbers. Sales price for single-family homes in the primary market of Summit and Wasatch counties, as reported by the Park City Board of Realtors multiple listing service for the year ending September 30th, showed moderate increases in both average, which was up 7%, and median, which is up 3% for the year earlier. Those increases were 40 and 50% respectively. The rate of sales, the number of units sold, and overall dollar volume dropped 30% for single-family homes and 27% for condominiums from the prior year. Fears that the market might be overheated, reinforced by continuing rise in interest rates, supply chain difficulties, and other inflation indicators, such as gas prices, slowed sales across the region. Price appreciation continues to be driven by lower available inventory, but that trend is reversing. As of January of this year, there were only 287 residential properties for sale across the region, and many of those were under construction. The number jumped to 836 by September, as more sellers feared they might miss out on a nice profit and put their properties on the market. Keep in mind, however, that number is half of what the normal inventory is for the Park City MLS and the Park City market. Park City neighborhoods vary very widely in price comparison, and the Q3 year-over-year results continue that pattern. For single-family homes, all but one of the major areas that make up the greater Park City market showed drops of units sold through the Q3 of 2022 versus 2021. The exception was the South Jordanelle area, where a number of new developments are being built in the anticipation of the Mayflower Mountain Resort project going in the near future. Sales in South Jordanelle increased 44% over the previous year. A lower median sales price point of $1.7 million, down from the year prior, which was $2.5 million. Condo sales were strong across the entire market range, but total local sales volume declined in all areas, primarily due to lack of inventory to sell. Within the Park City limits, condo sales volume was down 29%, but median sales prices rose 18%. In the Snyderville Basin, total sales climbed 28% because the average and the median prices rose more than 50%. Comparing the 12 months ending September 30th, 2022 to the same period of September 30th, 2021, new residential listings, single-family condo year-to-date are showing signs of recovery after lengthy periods of decline. For the 9 months ending September 2022, the total new residential listings were 2,511, which were down 96 from the year prior. The market is cooling off after an overheated 2 years of sales. Park City board members, the agents in Park City, the PC MLS members signed 1802 purchase contracts in the 9 months ending from 9/30 of 2022, which was 42% less than the previous year. The previous year, we all signed 3,124. So we're down 42%. With new listings running slightly higher than pending contracts, available inventory started to increase. Only 265 residential properties were active at the end of 2021. Only 265. So if you've watched my previous videos, I have reiterated this over and over and over again. The number boomed to 856 as of September. That is a 223% increase this year, but remember, we're still down compared to normal. And what's normal? 2019 is a normal market. Overall, how did the local market fare? Here is our take on the total year-long results reported on a rolling year-over-year basis for the period ending September 30th of 2022. So for single-family homes, overall sales units across the primary market area of Summit and Wasatch counties dropped 30%. A 3% rise in median sales price to $1.59 million was not enough to offset the volume drop. Total sales volume declined by 25% from the prior year. Through quarter 3 of 2022, the $2.5 billion in total sales was down. Highlights of the single-family market. Within the Park City limits, total sales were down 54%. But sales volume declined just 37%. The median price of a single-family home within the Park City limits rose 33% to $3.9 million. In the popular Old Town area, units were down 71%, so we sold 110 last year to 32 this year, as the median price set a new record above $3.6 million, which is a 63% increase. The Prospector neighborhood led all others for greatest increase in median price, which was 50% year over year to $2.6 million. Snyderville residents followed the prevailing market with sales volume down 33% on just a modest gain in the overall median price, which is 5% to $2 million. All but two Snyderville neighborhoods, Kimball Junction and Silver Creek South, saw declines in units sold, with Jeremy Ranch dropping the most, which was 60% to 31 units. Silver Creek South had the biggest gain with 22 homes sold, which was up 69%. Nearly 1/3 of overall sales volume comes from Promontory, $309 million. While Jeremy Ranch and Old Ranch Road saw the biggest price increases, with the median prices rising 53% and 44%. The median sales price in Old Ranch Road rose to $6.9 million, which is the second highest in the region behind the Canyons Village, which Canyons Village is $9.6 million. The Heber and Camas Valley showed substantial median price increases of 25% and 31% respectively. Despite fluctuations in regional markets, single-family sales activity in the primary market was still markedly down compared to the year prior, with a sales volume off 25%, while median sales were up 3% year over year. So this gives us a nice breakdown of single family. So within the Park City area, we are looking at a median price of $3.9 million, which is a 33% increase. For Snyderville Basin, you're looking at $2 million as a median price, and that's up 5%. For Jordanelle, it's 1.7. We are down 32%. Heber Valley is $1,042,500, which is up 25%. For Camas Valley, it's $1.188 million, up 31%. Wanship and Hoytsville, $705,000, which is up 18%. So if you add all of those markets together and take an average, the average for our entire market is about 1.450. So when buyers contact me and they're asking me, Nicole, what can I afford for $1 million? Well, you can't afford much. $1 million buys you about pretty much an average property. $1 million buys you a condo. That's about it. So now let's check out condos. The condominium market across the entire Wasatch Back continued to report even more and more larger median price increases than did the single family market. Every major area across the region reported increases of 20% or more. The condo market in Old Town neighborhood paralleled the single family numbers with a unit and sales volume down on a gain in median price of 20%. The median price of a condominium sold in Old Town is $1.5 million. So if you want to buy a condo and you want to land in Old Town, be prepared to spend at least $1.5 million. No neighborhood was immune to the drop, and that's for something that's not new. No neighborhood was immune to the drop, but the Erie and Deercrest both dropped to single unit sales. Price gains were nearly uniform across all neighborhoods, with only Upper Deer Valley Resort declining, which was 4%. Old Town and Prospector led the gainers, up 68% and 62% respectively. In Snyderville area, outside of the volume leader of Canyons Village, Silver Creek South and Silver Springs led sales volume increases, 107% and 60%, while other Snyderville neighborhoods saw sales declines due to lack of inventory. You hear that? Lack of inventory. In Wasatch County, areas with 10 or more sales are reported. Jordanelle Park doubled its sales volume over the year prior, and the median price is up 48% to $976. So this is for condos. So for Park City, you can expect to pay about $1.5 million, which is up 20%. Snyderville Basin, you're at $1,049,500, which is up 70%. Jordanelle, you're at $964, you're up 24%. Heber, you're at $496, which is up 30%. Camas Valley, you're $600K, up 20%. And so pretty much total for a condo, be prepared to spend at least $1,035,000 for a condo, and that's up 38%. There's not one of these areas that is negative for median sales price, right? Except for the Jordanelle, which dropped. So vacant land. After explosive growth in the year ending 12/31, land sales declined across the region, with every major area showing drops in units sold. The sales volume dropped in all areas except Jordanelle, where sales volume was up 48% on prices that shot up 61% from last year. Jordanelle showed the most activity, selling 431 lots this past year. The median sales price was $726,000, up from $450,000. So I'm telling you, if you keep waiting to buy, you will be priced out of the market. If you're not worried about being priced out of the market and you have all the money in the world, then great. You're just going to be paying more in 5 years. All the major areas of the market saw a drop in units sold. Snyderville, Heber Valley, and Wanship/Hoytsville were hit the hardest, dropping by half from the previous year's total. Only 35 lots were sold within the Park City limits, but that lack of available lots, coupled with high demand, pushed the median sales price for the few that did sell to $2.1 million, which is up 45%. So if you're looking for land in the Park City area, you can expect to pay about $2.1 million, which is up 45%. Snyderville Basin, you can expect to pay $930, which is up 25%. For Jordanelle, $726. For Heber Valley, $499,500. For Camas, you're at $425. For Wanship Hoytsville, you're at $32. Look at that increase in land prices there, up 284%. So if you're thinking about buying land for our whole entire market total, you're looking at a little over $500,000 to buy land. And that doesn't even include building the house. So where do we see things going in the next 3 to 6 months? So here are a few observations that are important so that we can figure out what's going on. So for single family homes, in looking at the year-long numbers, we may be missing a change in the market that occurred in March and April timeframe. Activity in the most recent 6 months was dramatically different from the activity in the prior 6-month period. The erratic stock market has had an effect on buyers' willingness to purchase now. Likewise, we expect to see more activity after this year's election is over and some of the uncertainty is eased. Lots of wait-and-see buyers waiting for their stock portfolios to go back up and to recover. The lack of inventory is more prevalent in the higher end of the market. So if you're looking at something over $3 million, asking prices are very ambitious in this range and more than the general market. And so it's resulting in less offers. There is significant inventory being planned for the Heber Valley that will probably come to the market in the next year. So look for a jump in activity around Heber Valley, particularly to the north of town. We are slowly returning to a more balanced market. Much closer to what was happening pre-COVID. both in terms of number of sales and sales prices, pre-COVID 2019. It's important not to use the broader market trends to paint every local neighborhood. This market is highly segmented, which is what I tell you in every single one of my market update videos. You can go back and watch them all. I tell you that every single neighborhood is a completely different beast of its own in Park City. So we're going to check out some of Rick Klein's stats here, which are totally amazing. So let's check it out. So we're going to look at absorption. So if we look here, our absorption rate is 4.5 months, which is up from 1.5 months. So the past 2 years, 2020 and 2022, our inventory has been 1.5 months. We are now 4.2 months. When he gives us a look at years of 2013 all the way to 2019, the absorption rate was 7.2 months. And if you look at NAR, which is the National Association of Realtors, which is giving you a very broad picture, the absorption rate is 3.2 months. So a balanced market, balanced buyers and balanced sellers, is about 6 months. And for a balanced market, days on market is about 90 days on the market. So this past 2 years has really rocked everybody. Sellers have been greatly spoiled, and we've kind of forgotten what a normal market looks like. So prior to COVID, homes were really, the absorption rate was really 7.5 months, close to 7.5 months. And now we're up to 4.2 months. So the absorption rate for the greater Park City area is 4.2 months. 6 months ago, it was just 1.5 months. The average over the 7 years from 2013 to 2019 was 7.2 months. So we are still selling homes much faster than in recent history, but the time frame is more than twice it was 6 months ago. That is a key phrase. How much is the market changing? We're starting to see some easing prices as mortgage rates rise and competitive bidding becomes less frequent. This market and the past 2 years of activity can perhaps be best illustrated with a snapshot of just third quarter sales totals since the Great Recession of 2008. In the 7 years from 2013 to 2019, looking at just third quarter sales, the market total for residents and land combined, between 400 and 500 units. In 2020, it almost doubled to over 900 before falling back to 700 in 2021. And now in Q3 of 2022, it's coming in at 460, back in the historically normal range. So we can pull up this slide right here to kind of look back Q3 2005, Q3 2006. So if we go back to 2019, normal market 2019, so we're getting pretty close, right? The chart of residential sale median prices right shows how dramatically prices have climbed in the past 3 years and how eerily similar the rising scope of the current price changes is the same to the rise in the mid 2000s. Economic forecasts are predicting a continuing economic slowdown, but none has projected a bubble burst crash such as we expected in 2008. So what are the key takeaways from this quarter's numbers? Inventory is finally improving since the end of 2021. Inventory has increased from 287 units to 836 properties for sale, but we are still about half of the pre-pandemic levels, pre-COVID levels. Demand is slowing. Sales transactions were down 30%. Condo sales are down 27%, and single-family homes are down 30%. Vacant land is also down 35%. Pending sales are back to 2019 levels or below. Demand is waning in the face of 7% mortgage interest rates, which are likely to keep rising into 2023. Affordability is becoming more of a challenge with both interest rates and prices continuing to go upward. If sellers and buyers ever needed expert advice to make sense of this rapidly changing market, the time is now. If you would like a copy of everything that I have been reading to you today on my video, send me an email and I will send you this PDF so that you can have it for your records. Real estate in the Wasatch Back consists of highly segmented markets with nuances that vary significantly from one neighborhood to another and one house to another. Comparisons are hard to read on paper due to the unique features of individual properties, such as amenities, conditions, style, location, age, view, and inventory. And if we drop down into here, this gives us an awesome example of basically all the neighborhood breakdowns. So if you're looking for, if you're a buyer and you want to kind of know what prices are in a certain neighborhood, this gives you an awesome breakdown. If you are a seller, this gives you an accurate breakdown of where you should actually be listing your house if you want it to actually sell. So for Old Town, we've got, for Park City Limits, you've got Old Town, Thanes, Lower Deer Valley, Deer Crest, Upper Deer Valley, Empire Pass, Erie, Prospector, and Park Meadows. Again, for all of those neighborhoods total combined, it's 3.9 million. Park Meadows is about 3.3 million. Prospector is 2.6 million with an increase of 54%. The area is 3.6 million. Empire Pass is 8.4 million. Upper Deer Valley is 6.4 million. Deer Crest is 9 million. Lower Deer Valley is 3.9 million. Thanes is 4.2 million. Old Town is 3.6 million, up 63%. This is for single families. If we go out to the Basin, Canyons Village, you are 9.5 million. For Sun Peak, Bear Hollow area, you're 1.3 million. For Silver Springs, you're 2.3 million. Old Ranch Road, 6.9 million. Kimball Junction, 1.160 million. Pinebrook is 1.675 million. Summit Park is 1.2. Woo! Increase of 26%. Jeremy Ranch is 2.3 million, up 53%. Glen Wild is 5.6 million. Silver Creek Estates is 2.275 million. If we look at Trailside, 1.4 million. Silver Creek South is 8.43. This is kind of like the new Silver Creek Village over by the Home Depot. Promontory, you are 3 million. Remember, these are all medians. And so Snyderville Basin combined, all of those areas combined together, you're at about 2 million, 5% increase. For Jordanelle area, you're at 1.9 million. For Deer Mountain, you're at 2.3 million. For Toohey, you're at 2.6. For South Jordanelle, you're at 1.1, which is down 62%. For Mayflower Mountain, there haven't been any sales there yet. So that have closed. So for Jordanelle, you're 1.7 million. And if we look at Midway, it's 1.164 million. Heber North is 1.2 million. Red Ledges is 2.6 million. South Fields is 742. Heber is 815. Heber East is 1.3 million. Timber Lakes is 695. Daniel is 873. And Charleston is 1.2 million. Sundance and Provo Canyon are 3 million. So total for the Heber Valley, you're at for a median, you're at an average of 1,042,000, which is up 25%. If we look at the Camas Valley, you're at 1.2 million. Camas and Marion, 1.2 million. Oakley and Weaver Canyon, 689. Pioette and Browns, you're at 630. Camas Valley, 1.118. Wanship and Hoytsville, 708. Morgan is 580. That's going up there because you got Wasatch Peaks Ranch going in, which is basically going to rival the Yellowstone Club in Montana. It's going to be private skiing. If you've ever skied the Yellowstone Club in Montana, it's pretty exclusive, probably more exclusive than Deer Valley, which is why a lot of people are selling their properties in Deer Valley and buying there. Huntsville, Snow Basin, Eden, you're at 1.9 million. Wasatch Front, this isn't going to be accurate because it's like Park City agents that sometimes take Salt Lake listings, and in order to look at what's happening in Salt Lake, you really need to pull up the Utah real estate MLS, not the Park City MLS. Okay, so this kind of gives you a summary of everything that I just did. So these are all and this is land. So here's condos. So Park City limits, you're at 1.5 million, Snyderville 149. I read a lot of these numbers to you earlier. Again, if you want a copy of what I am talking about, just email me and I'll send you a PDF copy of this. If you want to check out more on what's going on in the market, I talk about couple more little things in this video over here.